think that is what we really need to identify, and just to talk about follow what Michael was saying earlier, to let you know how bad it is when it comes to investors is even the trading, even the training. How many people do you train that use recommended 1% per trade? How many of them, when they go home with themselves, will still not use one lot size of $500 account? Do you understand? So at the end of the day, you need to understand that, see, less than 1% of people that go into every market, whether it is stock market, whether it is real estate, anything, any investment or opportunity of any kind, less than 1% of them actually come out profitable. That is why we only have less than 1% of wealthy people in the world. It is just the way it is, right? So I think that what is key, right, in both conversations, because, for example, you are coming from the angle that I'm providing a solution and I still want to be, and they are copying it, and I still want to ensure that I can monitor whatever they are making as profit. That is a fantastic approach in terms of care, right? At the same time, if you're also selling, if you're selling to 1,000 people every day, 2,000 people every day, you get you will care less. Not like you don't care, but unless they ask you that, sorry, I'm having this issue, you would not follow up on whatever they are doing with this tool. Because I have someone like that. That's why I understand. Because I've seen a lot of them chat me, like, in fact, they reach out to me more than the owner of the tool, because they feel like I am going to be there to listen. And it's only because that guy talks to people every day, right? So you get blow account, some double, some triple, some draw down. So you see different uses of the same tool. So I think that at the end of the day, it's important that people are properly educated. What education does is that education just lets you know light from darkness. But whichever one you want to choose is still in your hands. What of the ones you say you are monitoring, right? You say you are monitoring. The guy goes behind. He knows how you set it down, and just sees you setting it. Say, teach me how you're setting it. The guy goes behind you and says, how will you put 1.0 here? Put this thing on 5. Do you understand? So the key thing for a developer is to develop a tool that is that is sustainable, right? Sustainable in the sense that it understands, and that's what I'm still going to go to for my next conversation, which is around the markets, right? This market we're talking about, the global financial market, is an human behavior market. From currencies that we trade, is the dollar, the pound, they are influenced by human behavioral decisions. Crude oil that we are trading is human behavior. If Israel now and Hezbollah increase this war, start attacking each other's ships, and the Houthi rebels start attacking Saudi Arabia, oil prices will go up. That is human behavior. So my own question for you guys, developers, here is, how do you factor it in building your AIs? Because it will definitely affect. It's happening in a month. Election is happening in a month, right? And whether you like it or not, elections will drive the news.
It's already
to drive the market.
It's already doing that.
To drive the market.
Very true.
Powell spoke earlier this week, right? And you saw what was happening with the dollar. So how do you factor this in building your AIs? Because you know why? So that someone because COVID-19, for example, was a very good pointer. That people were losing money. Some people are making money. Some people are losing money a lot. It was just erratic because COVID was happening and it was affecting human interactions and all. So for me, what I want to know is, because this is very, very key for a lot of people that are listening, that or that are watching us, is that how do you factor the human behavioral changes? You get, how does the AI react to it? Does it just stick with the mathematical configurations, or there is a particular way this AI or it has not been developed yet, or it is being developed, or we've developed it, but this is the frailties we still face?
Can I say something?
Yeah.
Okay, so this angle that we are talking about is a very, very interesting angle, because my team and I are working towards that aspect. Now, you see, technology is now so advanced that you can decide to put in 4 or 5 strategies inside one artificial intelligence. You said human behavior, but 2 things are in the market. You either buy or sell. So if you buy when the market is selling, you will be in loss. And if you sell when the market is buying, you also be in loss. Do you understand? Now, I was speaking with one of my friend, who's also a developer, and he was trying to work with something with an OpenAI source, where the artificial intelligence can decide to, analyze the market itself using fundamental analysis and technical analysis. And when this happens, anything will either happen in the market. It's either you are selling when this happens and this price of gold skyrockets and started buying. How will the artificial intelligence react? It is based on what you put inside the artificial intelligence that it will react. Oh, okay, something has happened fundamentally, then gold has started buying, it switch itself, close the sell and follows the buy. There's a popular saying in Forex market, the trend is your friend. I remember something during the Brexit. So literally, I want to chip this in. Literally, a friend of mine bought an AI then around 2019, I think close to 2020. Was it 2018? During the Brexit that they said UK will announce their Brexit and all that. So this lady was actually using this AI. We were monitoring together and she gave birth then. She's actually in UK now. So she gave birth, and after giving birth, she said the AI has actually made about 40%. So we were just talking and we were planning on how we are going to withdraw profits and probably buy naming ceremony for the child and all that. So when UK announced Brexit, the AI was buying. Then the market was selling. So we were actually looking at how we will switch off the AI, and the naming ceremony could not hold anymore. So we've seen a lot. And one thing I want to say, it's if there is an AI that can read the mood of the market. I've seen different AI. Sincerely speaking, I'm not going to lie. I've seen ones that martingale. I've seen the martingale AI that is working perfectly. That even during the Russia-Ukraine war, it still survived it. I've seen martingale. So the thing is it's based on the strategy of the AI. That is one. And secondly, how an AI can easily react and readjust itself. Thank God there's OpenAI now. You can easily embed more strategies inside one AI and it moves. So now technology is so easy, very, very much accessible. It might not be affordable, but very, very much accessible to people that has the money, that wants to build this system and that has the system that will quickly react to the market, both on fundamental and technical analysis and all that. So I feel the more technology is more advancing, the less our worry should be. If a developer can decide to, build something that will quickly react to the market, not when gold is buying, the AI will keep opening lot size and keep selling and keep selling and keep selling till the capital sales finish and you don't have anything in the market. But once you notice gold has started buying, it either hedge. After hedging, then it follows the trend. Do you understand? So that is my own assertion on that.
Okay. So it's a very fantastic question, actually. And I commend you for that. And I think I love this forum because when we can answer this intelligent question, people will learn a lot. And so I commend you guys for doing this. Now, to be honest, this is the toughest part of every artificial intelligence.
Before you answer that question, just imagine this now. Research shows that during Trump's era, the stock prices go up.
Yeah.
So it's the same. History repeats itself. If Trump wins the election, it's likely that the US stocks and other stocks in US and other places will also go up. Now, how do you now bring AI to also key into this?
Okay, so let's talk about, we have things we call scheduled news. Right? For scheduled news, it can be easily configured, right? When you see a red folder news, stop trading 5 minutes before
the news.
Continue trading 5 minutes after. Right. Now, when you see an unforeseen news, what do you do? When Trump wins the election, what do you do? As much as historical data is there, sometimes they are proven to be wrong.
Sure.
So no smart AI should to bank on the fact that if Trump becomes president, the stock is going to go up. It might not go up this time.
Sure.
It might go up. It might just remain flat. Now, because we don't know, there are other things AI can do. What do you do when there's earthquake in a certain country and it's going to affect the market? The first thing every good AI does is not whether to sell or to buy, is to preserve. This is the part where you test whether an AI is really very good. Preservation. Once you've seen an unforeseen, there's a sign we already know that will happen in the market. There'll be spread. There'll be slippages. Right. So AI read those things and make a decision. Oh, let me cut out of the market now and preserve the capital. Because that's what matters to the customer that is buying the AI.
Sure.
It's not whether it's able to switch quickly. It will first pull out, look at the market. Where is the market trending? That's why something started happening recently. It doesn't used to happen in those days. In those days, when there's news and you read further news, maybe interest rate, if you want to go on a buy, it keeps going on that buy for a very steady time. But do you know what they do these days? They go on that buy, they return back down. Then they go back up again. You know who they are messing up with?
Your money.
Those that are following the trend. So when you switch to buy with him, he goes back on the sell. Takes you out. When you follow him on the sell, he goes back again on the buy. This is what the smart money guys are doing. But then a good AI knows that what I should do at this time is pull out of the market and allow the market to settle, because whatever is happening is not correct. It's artificial in nature. Some people are just using it to manipulate the market to their own advantage. Now, once they are done with it, a good AI now knows when to return back into the market and start trading again. I always tell people, if you miss a trend, another trend is coming.
Yes.
That's why I'm not a fan of news trading. You understand? Some people are big on news trading. They build systems that trade news. I don't know how they do it, but for me, it's not the time. It's just for 5 minutes. Why take that risk? You understand? You can spend the whole day looking for trend, getting into trend, getting out of trade, rather than chasing one quick move that I don't know what the market is going to do. Like I always tell people, it's not what you do that move the market. The market is going to move. Whatever it is going to move. All you need to do is to say, where is it going? Where are the patterns? Where are the signs to let me know whether I should buy or I should sell or I should pull back or I should stay put? Now, historical data comes into play. Historical data has to do with what was market like in 2020. What is it like in 2021? That's why when you build an AI, you want to test it for at least 5 years to see how it will weather the storm.
Of different conditions, economic activity.
But earthquake will happen. War will happen. Some nonsense will happen. Trump will tweet. You understand? All sorts of things is going to happen. It's what your AI does. Even though it doesn't know, and it will never know. There's no way we know that Trump has tweeted. I say if you plug it to Twitter, he can't read it either way and say, okay, this is what I should do. The best thing he can do is to say, what are the signs in the market? I'm going to have a last spread. I'm going to have slippage. Let me hold on a bit. Let me pull out. Let me chill out of the market and then come back in.
Okay, so I think that we've had a very detailed and comprehensive conversation. So we're running up now, and I think I want everyone to at least give. So at the end of the day, right? How do you expect a client to approach conversations around it? We've established that it is fantastic, and it helps, it's profitable. How do you approach? Let me start from Michael, then I come to Mr. Thomas, and Owina gives us his last.
Okay, so can you repeat the question again?
So how then do you approach? At the end of the day, we've established that it is profitable, right? How should clients approach the use of AI?
Just like what Mr. Thomas have been saying, right? And just like what we have been saying, the first thing is just like, let me use the word prescription. You need to make them understand. Educate them first. This is what we use. This is what it does. In fact, this is what drawdown means. Not that you just wake up in the morning and start seeing drawdowns. And some systems doesn't even have drawdowns, but some systems can have losing streak So just make them understand what they are going to. Like Dangote said something. He said that if you want to go into a business, you need to learn about the business. At least you need to have knowledge about the business, right? So if an investor comes in and he knows that you're trading Forex, may educate them. Let them understand the difference. Number one, the difference between trading in the financial market and Ponzi. That is one. Secondly, let them understand market conditions. And if you want to sell it to them, let them understand what it entails by them handling it for themselves or by you handling it for them. And if they want to copy you, let them understand what is going on and what the business is all about. So I think education is key. Educate them and let them have an insight of it. Okay, so Mr. Tom.
Yeah, there's a part of this country I like the most, the Eastern people. Yeah, it's a fact. You cannot be successful in business without learning.
Yeah, sure.
If you're interested as someone that wants to invest in the financial market, remember this, it's like gun in your hand. Money is like gun in your hand. It's a very dangerous device. You have to learn how to use it. Someone has to work with your mind and make sure you're not hot-head, and stuff like that. But having said that, AI is fantastic. Beyond being profitable, it saves you time.
Yes. It's
not emotional. Mm-mm. It doesn't participate in any of your activities. It doesn't go to the restroom. It doesn't sleep off. Mm-hmm. It doesn't have time to go for weddings. You can do whatever you want to do. Let him do the job for you. But you should remember this, that losing money is part of this business. As much as you want to embrace profit, you must also embrace losses.
Losses, exactly.
It's what you do when you lose that matters and how you handle it. But that you want to do any business that will not have any losses, it's not in the financial business. You must be able to approach those two imposters. You understand? You have to love both of them. You have to love profit. You have to love losses. And it's that relationship that you have with them that will make you very successful. Thank you.
Okay, for me, I've been in the business for a while, so I'm more of a traditionalist. I like my hands-on, trying to understand the charts and all that. But it doesn't stop that there's growth in the AI. The AI, even beyond trading, everywhere in the world, AI is taking over. So I can have two accounts. That's how I approach it. I have my natural trading account when I understand what has been happening. I've seen it happen before and I can put my mind and say, yes, I'll go for this. I put my bets down and this will work. And I can also have another account, know that, okay, I understand the system. I understand the structure of this AI. It's not Mantigale or like that's for me. But at the end point is that my portfolio should have AI inside it because that's where the world is going.
Okay, and there you have it. I think that this is one of the most informative conversations around AI in trading that you see around, and courtesy of Financial Journey Podcast. The goal here is simple. We want you to have the proper understanding of any investment option you're looking at, whether it is we've talked about stocks before, we've talked about treasury bills, bonds. Now today we're talking about AI, and so far so good. You've been able to follow the thought process, how it really works, and you've seen different point of views about what should be your approach as someone that is coming to invest in this space. But primarily, education is key. There is nothing you are going to try to do without understanding it. Try to get anybody selling you anything, try to get a verified account that this particular AI has been functioning on, right? If it's my FX book, if it's any of those platforms, they have verified websites where you can, okay, this is my AI. How long has it been working? Yes, so that you can have an understanding of whatever you're getting into. Then you can also, as much as possible, communicate your risk appetite to these AI sellers so that it helps in whether or not you can buy an AI or whether AI is for you or not. So that at the end of the day, you don't come out to say Forex is a scam, because it is not. People are making money on a steady basis. Thank you very much for joining us. We appreciate you. We love you. Please like, subscribe, and always put a comment. Ask us questions. We are always available for you. Till next time. Bye for now.